As we heard from so many different retailers during the quarter, it was almost hard to come up with a common theme because it seemed very story dependent, depending on which retailer was reporting and what they were seeing. Didn't matter, though. Stocks almost seemed to fall, at least altogether, afterwards, once sort of the dust cleared. Is there anywhere to invest in retail right now, or are the fears going to come true when it comes to consumer spending?
Well, Courtney, I think the one common theme that we saw was that inventories are out of control. So, we saw the average spread up 20%, inventories up more than sales by 20% at least. Some are way worse than that. Ironically, the department stores are the cleanest out there. Who would have thought? But I think at this moment, we're going to continue to see a clearing of inventory. However, if we think about the back half of the year and holiday, this is a wake-up call to retailers, and perhaps they put the brakes on the inventory purchases and get very conservative about second half of the year. And then once again, we're looking at product shortages like we saw during COVID. But I think there are names that you can invest in if you're in it for the long term, and names that have margin power long term, like a Nike that's going DTC increasingly. And we'll hear from them in a couple of weeks. So, luxury, I think you have to look for your opportunities there. There's no doubt, though, that we're going to see a wealth effect at some point. And lastly, I would say if, we can't buy cars because credit is so much harder to come by, you have to look at something like an AutoZone, because what we're seeing in stores across the board is people are fixing stuff rather than buying new stuff.
Very interesting points. Oliver, I know that you talk a lot about a bifurcated market with strength potentially on the low end and the high end, but even the high end has really started to see trends break, at least when it comes to the stock prices, even though some of these conglomerate companies that trade in Europe are still reporting pretty strong results. Is the high end breaking down?
We're still seeing a lot of great momentum, Courtney, in the high end in terms of pricing and the ability to achieve pricing. We really like brands such as LVMH. We also like names like Canada Goose as well, which has been able to pass through pricing to consumers. So we're selective at the high end, and it's something we're watching. The wealth effect is a factor, but brands with equity still have lots of leverage. And we really have a going out opportunity, going out stocks. That's a real movement in terms of people looking for swimsuits and suitcases instead of sweatpants. That's really happening. The other thing that we'd say is investing in your face, beauty. That's a very good category as well. A retailer that we like there is Ulta. And as we think about the low end, value is very, very important. Grocery Outlet and Planet Fitness are great ideas as well in terms of what we're recommending.
Oliver, that is an interesting point about going out. And I know that we have so many years where it felt like we were just stuck inside and have some of this pent up demand. And so maybe we want to update our wardrobes or update our makeup and hair routines. But if we move into a recession, does all that change?
Well, gas prices is something to watch for sure. That's a factor which could negatively impact traffic. However, there's a lot of newness in beauty, and we have a lot of new customers in this field as well, and it's a lower ticket item, as you know. And Courtney, we've covered Walmart and Target and Costco for a long time. These are actually great business models, which are a lot less expensive, and as interest rates grow up, they could be nice defensive opportunities as well. So there's something to watch as well. Curbside pickup, product execution, this omni experience at Target and Walmart, that's still very true. However, as we all saw, there was too much home product, big and bulky and outdoor, and the consumer shifted very rapidly. And also anniversarying the stimulus was tougher than expected. The consumer is still stable. Unemployment at 3.6% is an attractive, positive number. But at the low end, we're seeing in our research that consumers are spending less and being much more considered at the under 50,000 household income levels.
Stacey, Oliver brings up some interesting points about Walmart and Target. And of course, it was last week that Target, early in the week, came out with the information about inventory and saying, look, we got to take even more drastic measures than what we had talked about with our quarterly results. What's your read through on that as you talked earlier about inventory and what it means for the bulk of the year? Are we going to be seeing promotions and discounts right now? Maybe consumers can take advantage of it, but it could hurt the profitability of retailers. But then what does it mean for the balance of the year? Could they be caught short again when it comes to inventory levels?
Well, I think we have a database of 80 companies. We look at Europe and the US and promotions year over year. And there's no doubt that things are accelerating on the promotional side. We're also seeing, as I said, returns go way up. And that was something ASOS talked about today. In some of the stores, you see more bags coming back in than going out. So at the low end or the end where people are very sensitive to rent and gas, it's absolutely a pressure here. But, I think if Target has to have round two of slashing expectations because they're really that caught off guard, things are changing very quickly. But I think, as Oliver said, if you want to look at the long term and where the opportunities are, as I've said on your show, Target is the new department store. There's value there, and I think there'll be a lot of trade down to value. I think also a TJX where the consumer's saying, hey, I want to look for a treasure hunt and the best value out there. But to answer your question about the second half of the year, I do think retailers are going to become a lot more conservative on their purchasing. And perhaps that's the way to kind of cap off what we're seeing with all these huge promotions and maybe some shortages out there.